Be Wealthy and Smart, episode 1536.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about home prices being at record highs. Now, while that's a good thing if you're a homeowner to have your home be worth more, it's not such a good thing if you're trying to buy a home. First of all, there's a lot of homes on the market, and supply continues to gain with 1.53 million units for sale at the end of June. That's an increase of 15.9% year over year and represents a 4.7-month supply at the current sales pace. A 6-month supply is considered balanced between buyer and seller, so the market is still a little bit under-inventoried. The median price of a home sold in June was $435,300, which was up 2% year over year, another record high for the month of June. This is the 24th consecutive month of annual increases in home prices. Sales continue to outperform at the higher end of the market, and homes priced below $100,000 dropped 5% annually. Homes priced between $100,000 and $250,000 rose 5%, and homes priced above $1 million jumped a whopping 14%. Houses are on the market longer, and the average is 27 days compared with 22 days a year ago. Higher-end homes are selling faster than those priced below $500,000. And also, many of the higher-end homes are being bought with cash, so the interest rate situation is not impacting them as much. And we do have the average mortgage rate now at 6.77%, and that rate hasn't really moved markedly in the last several months. It's remained stubbornly high. Lawrence Yun, chief economist for the National Association of Realtors, said, "High mortgage rates are causing home sales to remain stuck at cyclical lows. If the average mortgage rates were to decline to 6%, our scenario analysis suggests an additional 160,000 renters becoming first-time homeowners and elevated sales activity from existing homeowners." He also said multiple years of undersupply are driving the record high home price. Home construction continues to lag population growth. This is holding back first-time homebuyers from entering the market. And he also noted that the average homeowner's wealth increased by $140,900 over the past 5 years. So when we look at new construction and what's happening over there, we can see that home builders are continuing to see weakened demand from potential buyers. And they've been cutting their prices at the highest rate in 3 years, according to the monthly Builder Confidence Survey from the National Association of Home Builders. 38% of builders said they cut their home prices in July, the highest share since NAHB began tracking the metric in 2022. And just 29% were cutting back in April, again versus 38% in July. The average price reduction was 5% in July, where it has been every month since November. And builders have been buying down mortgage rates to try to help homeowners get lower interest rates so they can get buyers in the door, which has cut into their margins. Some, but not as much as price cuts do. Also, single-family permits are down 6% year over year. Regionally, builder sentiment was strongest in the Northeast, where it rose 2 points. It's flat in the Midwest and dropped further in the South and West, where it was weakest. But what we're seeing now is all cash deals at 29% of all real estate transactions happening, and pre-COVID, cash sales were only at 20% of the market. And that's important because first-time buyers represent 30% of all sales. Historically, that demographic has made up 40% of all buyers. We're also seeing homes listed receiving an average of 2.4 offers, so they're still getting multiple offers, and that's down from 2.9 offers a year ago. So we're still a little bit on the low inventory side. Interest rates remain stubbornly high. More people are using cash to buy a home. The high-end market is selling like hotcakes because of cash, and new construction is helping lower interest rates for buyers to get into new construction. That pretty well sums up what's happening, but we are seeing home prices continue to rise in spite of uncertainty in the economy and some difficulties with higher interest rates. As far as interest rates go, the Fed does meet next week, but traders are not expecting any rate cuts until the Fed meets in September, and they are expecting at least 2 rate cuts before the end of the year. So we'll keep monitoring the situation and reporting back to you. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.